let's move along and actually build on Penny's comments about the way that capitalism and investing is evolving. Let's move into a panel discussion on wealth management for the next generation, where the esteemed panel will discuss how the industry is responding to meet the needs of the next generation of investors. In this conversation, we'll be joined by Doug Wilbur, CEO of Denim Social, right here in St. Louis, Jim Hayes, consultant and retired CEO of Wells Fargo Advisors, as well as Tanner Smith, financial advisor for Benjamin F. Edwards. Doug, Jim, Tanner, thank you all very much for joining us today. Let me go ahead and turn it over to you for our conversation on wealth management for the next generation.
Well, good morning, Ed. How are you?
Doing very well. Thanks, Tanner. All right, guys.
Okay. Look, we have Tanner here. We have myself. We have Jim. I think we got a party. Well, welcome everyone. It's a tough act to follow when Penn the opening act, but that was a pretty awesome little conversation. And we're going to keep things rolling here. I have a couple slides that I thought I would put on the screen to help us guide our discussion here. Okay, so we are going to take a couple minutes and talk about as we move into and continue to move into the digital age, how and what is the impact for wealth management, specifically for that next generation of advisor. So let me go ahead and get things moving here. Oop. That's weird. So again, my name is Doug Wilbur. I am the CEO of Denim Social. We are a B2B SaaS technology provider. We service the financial services industry. We empower customer-facing advisors, including folks like Tanner, to be compliantly active on social media and use social media as a business development driver for their personal books of business. So joining me today, and I'll give them an opportunity to introduce themselves. So joining me today is Jim Hayes and Tanner Smith. So Jim, do you want to take a couple seconds and say hello to everyone?
Sure, Doug. Thanks for the handoff. My name is Jim Hayes. Excited to be with you today. I recently retired from Wells Fargo, CEO of our broker-dealer, which had about $2 trillion of assets, and we were privileged to serve over 3 million clients. And since I've retired, I've spent my time in the fintech community, working with a number of really interesting companies, and in the private equity community, all with the focus on how do we improve client experiences and attract that next generation of talent to the industry. So looking forward to being on the panel today and sharing some thoughts with you. And Doug, I will turn it over to Tanner.
Good morning, everyone. Tanner Smith here, financial advisor at Benjamin F. Edwards. I've been with Edwards for a year and a half. It was a complete career switch. I spent some time in the government relations field in healthcare. So I've got a little bit of perspective from a couple of different industries, and I look forward to kind of sharing my a small bit of knowledge I have in the financial services industry with everyone today.
Don't sell yourself short, Tanner. You had a lot to share during our prep calls here. So setting the stage, I put together a few data points that I think are going to help guide the conversation over the next half an hour or so. So let me flip over to those. And I don't know why that is doing that. So hopefully that's not going to be a big deal for us. Okay, so we all know that the profession is evolving significantly. There's a couple of stats I think are really important to share. There's a lot of turnover coming in our industry. There are a lot of advisors over the next, call it, decade or so that are going to be moving on and moving on into retirement. And there's a massive opportunity because a lot of these advisors, in fact, 1 in 4 of them, don't have a succession plan. So if I am coming out of college and looking to get into the profession, now is actually a really, really good time to consider building a career as an advisor because there's going to be a lot of opportunity. There's also a significant transfer of wealth that is happening right now as sort of the baby boomer generation ages out and they start to transfer that wealth to their next of kin or their other family members. We know that there's a lot of changeover, a lot of turnover that's happening at the advisor level, kind of teed up that the clientele is changing as well. So the millennial generation, these are folks that are coming into their prime earning years. They're buying their first, if not their second home. They're starting to build towards retirement. They still want to have a financial advisor guide them through their ability to create wealth. So, there's a lot of noise in the marketplace about the robo advisors and the Robinhood accounts, and everybody sort of became a day trader during COVID. The reality of the situation is that a majority of millennials do want to have a professional advisor. And as I mentioned before, there is a significant transfer of wealth that we're on the very cusp of seeing, to the tune of $84 trillion is going to change hands over the next 25 years. Where does social media and selfishly, where does social media come into all of this, as we're a social media management platform? This generation of consumers want to educate themselves, or investors, I should say, educate themselves first before they have a conversation with an advisor. And increasingly, they're turning to social media as a way to educate themselves about what they should be considering with whom they choose to work with as a financial advisor. So it's social media is a massive conduit for that. In fact, in many ways, they're using social as their de facto search engine, and not turning to the traditional way that we might think we would research an advisor. They're turning to social media first. So lots of changing, lots is changing. There's one common denominator that is not changing, and that is that in our industry, probably more so than any other industry, relationships matter. And advisors are capitalizing on this opportunity to use digital tools to build a deeper, more meaningful relationship with their customers and their investors and their clients, because they understand that, yes, in the physical world, we do want to have opportunities to meet with folks and to really sit down around a table over a cup of coffee. But that happens after you've built trust and credibility and established yourself as a professional and built that relationship in a digital way. And then that translates into the physical world. So it's a time of transformation. When we're coaching and when we're having conversations with advisors, we're encourage them to embrace the next generation of tools. How do we actually arm you with better tools and solutions so that you can build a book of business for yourself? So with that being said, we're going to dive right into the discussion. I'm going to stop sharing my screen here so that we can focus on our panelists. And we'll go ahead and get right in here. So Jim, I threw a lot of stats out here for everybody. What's your reaction to that? And coming from some of the larger organizations that you were a part of, how is that, is that ringing true for you? And how, in your experience, are firms embracing sort of that next generation of advisor?
Yeah, I think it's spot on, Doug. And I think that when I think of the comments you made about sort of the broad macro trends of, the transfer of wealth to the next generation, what really comes to mind, for me, is what an incredible opportunity this is for the next generation of talent to come into the industry. Yeah. And there are a lot of things that are happening right now that really bode well if you're in university and you're about to graduate and you're thinking about a career and you're thinking about sort of attributes of what you would want, a dynamic industry, an entrepreneurial spirit, the ability to interact with interesting clients. Financial services has all of that, and it's a great place to be. And so the things that the industry and firms are doing to sort of make those opportunities, real, are a couple of things. Number one, on training, when you think about how people get trained in the industry, there's a lot of new activity going on new products and services. And I'll give you a quick example. It used to be in wealth management that we focused on financial planning and tax planning and investment planning and perhaps insurance planning. Now, one of the new sort of areas that's sort of coming out is healthcare planning. And not to say that a financial advisor is going to talk specifically about the health of an individual, but the cost side of the equation is really one of the primary determinants of retirement and lifestyle and things like that. So there's firms there's a little fintech called Caribou Wealth that I met the other day, and I was talking to one of the founders, and she is terrific. And what she talked about was, what happens when you turn 50, 55, 60, and you're going to retire? How do you transition to your own medical insurance? When does Medicare, Medicaid kick in? And why is that one of like the biggest expenses that's out there? And so there are technology companies that are really creating new products and services. I think you mentioned, social media, and I've been super impressed with Denim Social and the team there. And one of the things that's really interesting is, when we talk about social media, we talk a lot about authenticity and how do you connect with your clients on the relationship piece.
Yep.
And I think one of the things that social media does is it gives the advisor the ability to create interesting content, find interesting content, share that content, through platforms like Denim and get them on multiple, tech platforms, LinkedIn, Facebook, et cetera, to develop that connectivity. So there's a lot of new stuff that's going on in tech, whether it's product, whether it's social media, whether it's, technology-driven marketing, that's really interesting for that next generation. There's teams that are being formed. So, the average age of the advisor in the industry is about 60 years old. And the average age of who's going to inherit all that wealth is obviously much younger than that. And so that next generation of advisors coming in really has an opportunity to be part of a team, and really benefit from pre-existing relationships, introductions, and help in growing a practice. So I think the industry remains dynamic. It remains a great opportunity. And I think this combination of human advice along with technology-enabled advice and tools is a great combination for that next generation.
And it's fascinating when you think about sensitive personal subjects like health. You're not going to necessarily just fork that over to any advisor. You don't want to have that conversation with a financial advisor, financial planner, unless you trust them, them, right? And so kind of getting back to what was on my slides about relationships matter and how do you actually authentically build a relationship with a customer. I think it's fascinating to see, and it's a insight that you shared about it's broader than just, financial planning and tax planning, but there's a different narrative that's being woven into this, and advisors who actually can build that bedside manner, so to speak, and build a relationship with a client are going to be that client's going to be more open to share.
Yeah, I think it's the old adage of healthy, wealthy, and wise.
Yeah,
right. So
for sure.
You think about that old sort of saying really comes to the fore when you think about investor education, when you think about the health of the client, and when you help to build and manage their wealth.
Yeah, healthy, wealthy, and wise. I love that. I'm going to jot that one down. So Tanner, I'm going to pass the mic over here to you. You're a younger FA. You didn't necessarily make this your first career stop. How are you doing things differently than perhaps some of your other more well tenured brethren at the firm? Like what are you working on right now to build your book of business?
I'll tell you to start things off. I'm an elder millennial, so I was born in '85, which I kind of look at that we weren't real handy. Can't really do much with our hands. We're also not that social media savvy, kind of tweeners, if you will, a pretty average part of the millennial generation. So when we were kind of trained, and social media was a very small portion when you were coming into your career field. So starting at Edwards, they said we use this Denim Social thing, and I'll just be flat honest, I wasn't really a believer. I'd kind of roll my eyes at it. And then I thought, you know what, I've got to have something, I've got to do something here. And so I talked to our marketing team and got set up on LinkedIn, and lo and behold, almost the first post, it was one of the first 5 days I was on, there was a post about if you're leaving your workplace, you have options with your 401k or 403b. I get a message through LinkedIn that says, "Hey, I just read your article, really good stuff. I think we need to talk." And I was absolutely floored by it. The guy who sent me the message I had formerly worked with, hadn't talked to him in a few months. But he had contacted me, and now his family is all a client at Edwards. So, there has to be that social presence. The millennial generation in general does love to ingest content, make their own decisions, do their own research. It's hard to go in and do a hard sell on somebody these days. They're just not into it. So kind of continually being at the front of their mind and their thoughts, and eventually posting something that might really cause them to reflect is where you're going to get your clients. Now, again, that doesn't replace a face-to-face meeting eventually, but it's an extremely large part of what we do these days.
Yeah, and I think it's, even just beyond social, I think, one of the things that, we coach our customers on is that authenticity piece and your digital persona, social included, but all digital channels should be an extension of who you are as a person. You should be leveraging digital to create opportunities to showcase who you are as a person and the things that you care about and the things that matter to you, because that is ultimately going to align to the types of clients that you're looking to build relationships with. So, we coach folks all the time. You mentioned like the in-person meeting, like the same conversation that you would have over a cup of coffee is the same type of conversation that you're looking to facilitate digitally, right? Without putting the hard sell on somebody. So it's cool that it's working for you. So Jim, I mean, other to you, I'm sure there's other things beyond just, thinking about, digital and building building awareness. I mean, what other things are financial advisors doing to take advantage of this transfer of wealth that's getting ready to happen?
Yeah, I think that this notion of teams as a driver of productivity is like a really, really big deal. I mean, if you really want to grow in your career, don't go it alone. Go with somebody.
Mm-hmm.
And so when you think about the average age of an advisor in the 60s or so, and managing, at some of the bigger firms, $150 to $200 million of client assets, one of the smartest things a new advisor can do is come into the industry and join a team. And really, it's all about complementary skill sets. And what that can look like, the new advisor might be really terrific at relationship management and prospecting and being out there. The experienced advisor might be really terrific technically and a good inside person. So an inside person versus an outside person. That would be an example of complementary skill sets. You could have somebody who's really proficient in the equity markets. They like those. And they want somebody who has a deeper understanding of the small business market. Another example of team goes beyond sort of generational teams, which is that in itself is a major win. It's also about complementary skill sets and what you, number one, I think technology, we touched on that, but I also think what's happening is the ability to interact with clients when and where they want to meet with you and do business with you is really important. So, and all of these technologies sort of augment the way that you build the relationship. So, we touched on social media, but think of other ways that you or your institution might interact with a client. So an ATM machine might be an example of that. When you go to an ATM machine today, for some of the larger universal banks, the machine actually recognizes you. Mm-hmm. They understand your pattern of withdrawals. They understand some key facts about you. And they might make a specific offer. Would you like to talk about a way to get a discount on, something that you own? And so that's a form of communication that the human obviously inputs the algorithm into that and sort of creates that. So I think this training, teams, and technology really are, to add a fourth T, the trifecta of delivery, in the future. And so I feel pretty good about that. I think, what I feel great about too is that next generation is so tech savvy that they'll discover new and interesting technologies that allow ways to connect.
For sure, and I think that's when you think you hit the nail on the head. Like as we sort of collectively are bringing in new folks to be advisors who grew up in a day and age, like there's folks right now who are looking to get into this industry that never knew a word without an iPhone. And they expect to be able to do everything they need to do to manage their book of business from their iPhone. And that's a different challenge for firms, right? Like, how do we actually embrace technology in a way that will differentiate us from a recruiting perspective, right? I mean, like, you want to be a digital forward, a tech forward firm to be able to recruit the top talent that expects to be able to run their business off of their iPhone.
Yeah, it's exactly right. And I think where some of the firms have been a little slow is they view digital as sort of a separate channel rather than view it as a separate channel and interwoven into everything that is done. And so it can be a separate channel from the standpoint of many clients want to go direct or they're do-it-themselves investors. And, from that, you have things like robo-advisors and online, trading and things like that.
Yeah.
But it's also interwoven into everything. And actually, when you look at full-service relationships that are led by a trusted advisor, over 75% of those relationships have a digital relationship somewhere, either at that firm or somewhere else. And so these strategies are not either or, they're and strategy.
Yeah. Yeah. And they all interact with each other, right? I mean, we say that, and Tanner, I'd love to get your feedback on this as well. Like, one of the things that we see quite frequently, as marketers, is you do think about discrete marketing channels. But your investors and your clients don't think that way. They don't think, oh, this must be part of an email campaign, or this needs to be part of a social media campaign, or this is an SEO or an SEM, or clients don't think that way. They just want to have a relationship. They want to have a relationship with their advisor, and they want to be able to get their questions answered however it's easiest for them. So maybe that's an email, maybe it's a text, maybe it's a DM on LinkedIn, maybe it's a WhatsApp message. At the end of the day, that's about enablement and empowerment for advisors to be able to say, you know what, I'm going to be omnipresent because my customers expect me to be, and I need to embrace all forms of technology. So Tanner, I'd love to kind of get your read on this without, being the always on questions all day. But how does that work for you? Like, how are you the best way to engage with your clients digitally?
It's funny because as you were saying that, we had a meeting this morning with a gentleman, and I had never actually spoken to him. I did try to call him, but I saw he had viewed my LinkedIn profile multiple times, and then it was direct messaging and email. He scheduled an appointment through email, and after I'd called him, I left a message and said, "Hey, let's get together. I'd love to find some time, give me some times." And I said, if you want to, you can schedule below my email signature. That's how he did it. So I'd never actually spoken to him until this morning at about 8:00. So it's a lot different. I like to pick up the phone, and I have no trouble doing that. It's a quick way to go about it. But as to your point earlier about millennials, it's a very busy generation. Both parents working, kids, sports. I mean, that's overflowing. There's not a lot of time. So working digitally is just easier. I'll get back to you when I get a chance to.
When it's convenient for me. It's an asynchronous way to conduct business. But the relationship still matters. You still need to be able to provide value. That conversation that you're trying to have over the phone, you break it into pieces and you deliver that message digitally. In the channel of choice of that investor. So we're getting a lot of questions. I want to they're all kind of related to social media. So maybe I'll just kind of call an audible here and go to a little bit of Q&A early. So the first one that came in and about 20 minutes ago, he said, what do you think the biggest hurdle is to getting financial advisors comfortable with social media? I have an answer, but Tanner, I'd love you to swing at it first.
Results, I guess. There's an obvious regulatory side of it, which is why, we use the Denim socials to make sure everything goes through compliance, et cetera. I think it's just for the older advisors, they've just never done it. So they're not going to do it.
Yep.
To Jim's point, when he talked about teams, we just actually had a conference this week, a symposium, and there was a lot of teams, younger advisors coming in that were strictly there to learn about some of our tech that we have and that we can use. And, mom or dad or their, elder team member sent them so that they could learn about that. Again, I think those hurdles are, it's just a lack of knowledge. Again, as I mentioned earlier, being an older millennial, we had basic technology, but it was not built into us that it was something that you absolutely had to have.
Yeah.
And so I think it's kind of changing that mindset. And obviously, as the younger generations get older, you just have your phone in your hand almost all the time. So it just becomes more natural.
Yeah. Yeah. You're spot on. I would say, there's two primary things that we see, when somebody's coming from not being active on social, but understands there's a benefit there, the barrier to adoption, so to speak. There's two things. One that we see is well, what do I say? Right. So how do I actually know what to say? Is compliance going to be okay with what I'm saying? Like, what's that governance structure around what do I say? But then also marketing, supplying the advisor with enough content that's relevant, that can be personalized and, put into your own voice, right? So it's the supply of content and relevant content, and not just, branded content, but also, thought leadership content, right? Like when you're scrolling on your personal, social feeds, whether it's LinkedIn or Instagram or Facebook or whatever, like I always in the back of my head, I always am paying attention to the content that I stop and engage with, just as a consumer of content. And I always find myself stopping to engage if it's from somebody I know and they're sharing something interesting. And that's the best way to sort of start to build an audience for yourself. I think the other thing that we see quite frequently is creating the habit and making it a habitual part of your day to not just post, but to also engage. And so I was actually listening in on a webinar a couple of weeks ago and got some really interesting tips. And it was really kind of like framing your thought process around social is a conversation. It's not a megaphone, right? And, smart advisors are actually going on social and not just going on social to post and ghost, so to speak. They're going on social to facilitate a conversation. So going on social, liking and commenting on things that you're seeing, and then posting, right? And then when folks are engaging with your content, re-engaging with them. And that just becomes part of the habit that you develop of how you go to market as an advisor. And it's not like hours a day, it's 15 minutes a day. Carving out 15 minutes a day to be committed to building your social presence and having marketing supplying you with content is really a formulaic way to drive success. So just looking at some of these other questions here, how do you determine what social media content and conversation topics are appropriate versus inappropriate with regard to FINRA regulations? So Jim, you probably dealt with some of this FINRA stuff in the past. Maybe I'll get your thoughts on this one.
Yeah, it's an interesting question. I think that a lot of the content that comes from advisors comes from research departments, and so it's gone through sort of the compliance traps and whatnot. I think the primary things you want to think about are stay away from product specific social media posts, stay away from posts that talk about rates of return and definitely stay away from the word guarantee because there are no guarantees. There's just different levels of risk. I would say the things in my mind that are sort of more interesting in content, and I totally agree with what Tanner said here, is that when you're out there on social media and you're sort of posting things, there's this notion that you hear about, well, I don't see any results, or what's my return on investment, but it's sort of asking a question like, well, how did you build a relationship with somebody?
Yeah.
Well, you went through a lot of things. You went to the ball game with somebody, or somebody had a challenge in their family, and you were a sounding board for that. You built a human connection. And I think, Doug, your words about it's not a megaphone, it's a conversation, is think about what would you have a conversation about with your clients? And so you can get that regulatorily compliant and approved. Particularly on the non-investment related stuff, but you also want to have that stuff be relevant to your audience too. So what I would say is share things that you believe in and that you think are interesting. And Doug, I'm like you. I see things on LinkedIn or other posts, and I look at it and say, I'm kind of interested in that topic, and I click on it.
Yeah.
And over time, if you see enough from whoever is the sender of that, you begin to say that person's got a lot of credibility.
Yeah.
And that might lead you to, I want to get to know that person.
Mm-hmm.
And that could then lead to, let me send them a LinkedIn. Let me introduce myself. And so I think, to me, what's fascinating is the reach that you have. You can almost get to anybody if you put in the time to build a relationship and build authentic types of relationships.
Yeah. And one of the things that we see, and we work with a lot of compliance officers, right? And I've learned over the years that compliance is definitively an art, not a science. And there is, and it all comes down to the firm's appetite for risk, right? How much do we want to empower our advisors to be active on social? What are the guardrails that we're comfortable with, right? How tightly or how wide do we want to let them operate within those guidelines? But ultimately, we see that when an advisor is being their authentic self, and they're not, Jim, to your point, they're not talking about guaranteed rates of return. They're not talking about products, right? They're just building credibility and thought leadership, and they're sharing things that are important issues and their read on an important issue that their community should be paying attention to. Your actual risk of compliance goes way down because you're not talking about those sensitive subjects that the regulators are going to, not be happy with. If you're talking about who you are as a person and why you're different, like there's no issue with that. And that's what with the content we want to engage with.
Yeah. And I'd love to hear sort of Tanner's thought on this, because the interesting thing about that is, as you share content that it's like interesting to you and that it becomes interesting to your clients, like over time, what happens is your clients become your friends in a lot of ways, because you have some common interests, and, not every one of them, but a lot of them do. And that's one of the most rewarding things about being a financial advisor is these relationships you have with your clients. So,
you develop, it's very interesting. People, that have become my clients, I may have known them, may not have known it at all. You get to know their family, you get to know their friends, their, lifestyle, et cetera, et cetera. And you, obviously the social media aspect of it, you're connected. So you see what they're into, again, the lifestyle portion of it.
Yep.
And back to, Doug, when you're to your point earlier about, on social media, if you see something interesting, you click it, you may like it, maybe share it. And so you're opening up, when you're doing that, everyone that you're connected with is seeing what you're up to. And so then you're expanding that individual network, quite frankly, because there's tons of people that would have never seen that. And all of a sudden, they, you get one or two of them that say, that's interesting. I haven't thought about that. Maybe I need to, take a look.
Yeah.
So, it's a very powerful tool, or can be if utilized properly. And to the compliance side of it, I that's a great question. I'm scared to death, so I don't.
We know your compliance team. They've got it handled. They're good. Yeah. In fact, we were actually hanging out with some folks from your compliance team out in San Francisco. Jim was there at an event for SIFMA weeks ago. So we got to know some of your compliance folks pretty well. Yeah. Well, and two, I think, we keep mentioning LinkedIn, but, one of the things that we hear quite frequently and the best practices, of course, like this is LinkedIn's perfect. It's a professional environment. It's B2B. You're trying to court relationships with professionals, right? And so that's a great place, but don't sleep on being active on other channels if you think that you have an authentic message to share on other channels as well, right? And one of the things that it's either we get questions about like, oh, do I have to be omnipresent on all social channels? No, you don't. You should be present on the social channels, one, where your clients are, but two, where you feel like you can be your authentic self. Where can I be the best representation of myself physically? Like, how can I represent that digitally the best? And so that's another, coaching opportunity we provide for our customers is like, don't think that you have to be on all channels and be omnipresent. Pick the ones that work best for you and let the data tell you, right? Where are you driving the most engagement? Where are you developing an audience? And using a platform like ourselves to sort of monitor those analytics is super helpful for a lot of advisors to be able to say, I'm posting content on, Facebook and Instagram and LinkedIn, but, surprisingly, it's Instagram that's getting me the most engagement. Maybe I'm going to rethink my Instagram strategy type of thing. Right. So, Cool. Let's see here. Well, Jim, I mean, one of the things that we haven't gotten to yet is if I'm looking to break into this industry, as a new advisor, you've kind of come down that road before, and we talked about like looking for teams and looking for tools. What have we missed anything? Like as somebody who's thinking about getting into the industry, like what should they be looking for in their employer?
Yeah, well, I think the first thing is the question I would ask would be, what should they look for in themselves? And so I think the first thing is you have to truly like people, and you have to like engaging with people, because it's a people business. And sometimes when you're new and you're starting your career, you hear this word sales and you think that's kind of a dirty word. And if you like put that word to the side and you say, well, really it's about people connectivity and liking conversations, and you get energy from that type of activity, that's a great attribute for this business. So that's number one. Number two, I would say the word resilience. In this business, everybody has an opinion on everything. The market's going up, the market's going down, the Fed's going to ease, inflation's going to the moon. And so what happens is you get into dialogue with people, and sometimes your opinion carries the day, and sometimes it doesn't. And so you have to be resilient around some of that back and forth. And even in the sales process, sometimes the rejection that happens when you try to obtain a client and you don't get that. And so as you get older, you realize that's just sort of part of almost any business. In fact, the chief executive officer of a business is really the chief salesperson of the business, in a lot of ways. So I think the first thing is know thyself, right? Know who you are, know what you like to do, what you don't like to do. And that's an important part of it. In the firms that, people are thinking about, there's a lot of variety, and it's just knowing the pros and cons to each. So the larger firms tend to have multiple channels where they have, bank departments, they have brokerage departments, they have independent channels, they have digital channels. And so there's different nuances to each of those channels in terms of where you start.
Yeah.
The independent firms have some advantages in that they have a lot of flexibility. They're a little less bureaucratic. They tend to be a little bit more tech forward, but probably fewer resources at the same time. So you have that sort of balance. So then you get back to yourself again. What am I comfortable in? Do I want to be in a big environment where there are a lot of resources, opportunities to work in different channels? Do I want to be in a more entrepreneurial environment, et cetera? And then the third thing I would say is this word culture.
Yeah.
So I'm not a big believer in talking about a culture. I'm more of a believer in observing it, and kind of seeing what's out there. But you get a impression of the culture by, the interviews that you go through. What does the office footprint look like? When you meet the first person, when you walk into the door, what do you say to them? What do they say to you? What does the marketing material look like? What about the caliber of the people in the organization? And so you begin to put all those things together, and you get a sense for, is this a aggressive culture? Is it a supporting culture? Is it a challenging culture?
Sure.
Is it one that is performance oriented? Is it one that's team oriented or individual oriented? And so you want to think about the culture of that organization, like how would you fit into that, and what do you gravitate, towards? So, I like organizations that are meritocratic, organizations that are performance-based and collaborative at the same time.
Yep.
I don't gravitate to organizations that are basically one partner competes against another partner versus, working together for the common good of the firm or the client. Because I think you always do better when you're together than apart. So I think those are other attributes to look at: culture.
Cool. Tanner, anything else to add on top of that?
No, I originally thought I could, and Jim covered it really well. The only thing I will add is when he talked about personal resilience, one of the first things when I started was a phrase someone shared, about sales and trying to get clients and get turned down. And they said the wild thing for the first few years is that when you're at the peak, the only thing you can see is the valleys. And when you're in the valley, you cannot see the peak. So, which I thought, so, that's a pretty good phrase for the industry. But I have nothing else to add. Jim covered it perfectly.
Yeah. And, Jim, to your point too, I think there is sort of this like negative tonality to sales, but ultimately into, Penny's conversation before this, I mean, that's the root of capitalism, right? And, we have to get ourselves comfortable with the fact that we are in a business development, role. It does require a tremendous amount of resilience. It does require a tremendous amount of thick skin. But the rewards, if you can become a valuable asset to your clients, right, is the rewards are incredible, personally and financially. And so to me, when I think about, and you being the CEO of a company, I still do feel very much that I am like, yeah, I'm the CEO by way of business card, but I'm really the chief sales officer. Because, how I bring our product to the market and how I articulate our why, right, that translates into our sales team and how they can articulate our message as well. But I think ultimately the thing that I always come back to and this has been, having been in the industry for as long as I've been in the industry is relationships matter. Never burn a bridge. Even if it's no today, it may not be no tomorrow, right? And just really, really focus on adding value to the relationships that you have and cultivate those relationships, because it'll all come back around in the end.
Yeah, I totally believe that. I like, you see a lot of T-shirts out there that are sort of fashionable right now. They say, be humble, be kind. And I think sort of related to your words, like you always want to play the long game. There's an old adage that Wall Street is a small street. And it really is as you get to know people. And so you just want to be a good person and, do the right thing for clients. And, good things will come around. You definitely don't want to burn bridges because, you might do that and you're leaving a firm and then you find out your firm just got acquired by the firm that you were at.
Yeah.
And so it's, it's a very small place. So you just want to do the right thing and play the game for the long term.
Totally.
It's a fun journey.
Yeah. Cool. Hey, we got one last question, and I think we'll wrap things up here. And this is a question that I'm not necessarily equipped to answer, but maybe Tanner will put you on the spot here. It's all about the notion of like, how do you actually get somebody into a meeting and the prevalence of Zoom like we're doing now versus in person? Like, has that changed the way that you work with clients when you're not meeting them, at the table, you're meeting them at the virtual table?
Absolutely. You can have a client, and Jim's been here for a number of years. There's clients across the country. You can be licensed in any state. And, we have a couple of advisors here that are, 25 states licensed. Mm-hmm. They don't meet their clients in person, maybe ever. Right. We're talking about Zooms and Teams meetings. Again, hey, I want to see your face, and I want to talk about, your plan. Where are we? As well as your, results, whatever it may be. It's very heavily online. We always offer that option. If it's someone local, you probably prefer to do in person, but the online ability, you can do. You can have a meeting from almost anywhere, whether it's your couch or the office or obviously we're doing this right now. Yeah. And I don't know if everybody here is actually in St. Louis, but, assuming so, but, you could be just about anywhere and be on this meeting. So we have meetings with clients all the time online. It's something I usually just offer, if they're, if they're more than half an hour away, I absolutely, hey, let's do a phone call or a Zoom or Teams, whatever it may be. Yep. And then kind of let them decide from there. But it's been a huge integration into the industry, and it probably grow a lot more moving forward.
I'd love to get your read on this too. I mean, one of the things that we've focused on here at Denim is how do we build relationships? How do we provide coaching opportunities? How do we build rapport, just even internally, when Zoom or the digital meetings are very, what's the right word, like transactional, right? You show up a specific time, maybe you talk about the weather for a couple minutes and you sort of dive right into it. And there's nothing that happens like the before the meeting when you're standing in the lobby, and getting somebody a cup of coffee and talking about their kids. And the after part, when you're walking them out of the office and you have that opportunity for relationship building, right? The things that happen before and after the meeting are just as important as the content during the meeting. And I see that as another opportunity to sort of advisors that have a digital presence that are engaging with folks out of band, sort of asynchronously on social and in other channels. So you can continue to build those relationships, in micro segments. So that when you show up to the meeting, you maintain that credibility and you can talk about something other than the weather because you know the client, right? So,
and then also internally, Doug, and this goes back to Jim's culture discussion within your firm. Meetings happen online a lot, oftentimes. So it goes back to company culture. Building depending on how your culture is. If you're hopping on and doing a transactional meeting, that's all you do, or if you're able to find other ways to connect, whether in person or otherwise online.
Yeah.
And with the client meeting, 100%, it's, again, it can be very transactional and here, hey, we have 30, 45 minutes. Let's get down to business. It presents a challenge and an opportunity, especially when you have a digital world in front of you where you can be connected to anyone, anywhere at any time.
For sure. Jim, any parting thoughts as we wrap things up?
I wish I was 30, 40 years younger and starting off just like the student base there, because I think you got a great run ahead of you. And the industry is going to change. It's super dynamic. But this merger of human capital and technology is really, really exciting. And so the industry is in good hands with the next generation.
Yeah, cool. Healthy, wealthy, and wise. I think that's the tagline for the day. So I guess with that, we'll move to wrap up. Ed, I think maybe do we pass the baton back to you?
Yeah, absolutely. Thank you so much. I appreciate that. And Jim and Tanner, your thoughts on, I think, an important conversation and just a few takeaways there on being your authentic self, finding that medium that allows you to be that through a digital means. And I think the opportunity for this team-based environment, that authentic self might look differently on different mediums, and that team-based environment probably allows advisors and teams to go out there and be more effective if you're able to pull on those multiple levers. So just a fantastic conversation. And Doug, thank you for leading that conversation as well.
Thanks for having us.
Right.